Welcome to Webinar Wednesday. It's Wednesday. We're back doing Let's Talk Property, presented by the Elam Property Group and Real Estate Investor Magazine, or Real Estate Investor. We'd like to welcome our audience to today's discussion. Today we're going to be discussing property investment offshore and how best to do it and how best to get around it. And we've aligned up probably one of the nicest panel of people that we could align at the moment today, and looking at a couple of different spaces across the world to invest. We're looking at Portugal, we're looking at the UK, we're looking at the US, and we're looking at Cyprus. We've also invited Graham Barrett to be part of the whole thing, just to help us from a currencies point of view and give us some insights and advice across from that side. So welcome. And without any further ado, I think let's get across and meet the panel for Let's Talk Property and who's going to be joining us today. So welcome to Malcolm.
Hello, Eugene. Nice to meet you, everyone. I represent a company called New World. We are developers in Lisbon, in Portugal. We've been there for 18 months. One of my better-known partners, Johnny Raby, is well known in this country, certainly in Cape Town. Together with Leon Cohen, put Century City on the map over the last 20 years. And it's great to be talking to your viewers and sharing our experiences in Lisbon.
Welcome, thank you very much, and welcome. And I was fortunate enough to watch some of the stuff that Johnny's been busy with from his side. So yeah, it's awesome to see what you guys are doing over there. Welcome all the way from Cyprus. Welcome, Jenny. Jenny, you're on mute.
Mute, great. Hi, welcome from sunny Cyprus. As you can see by the clothes, I'm not dealing with the South African weather. Just in terms of who I am, I'm Jenny Elinas, the founder and CEO of a company called Cypriot Realty. And we're helping South Africans and investors around the world to realize a plan B in a slice of the Mediterranean, in an English-speaking country where you can get more than just a residency or a citizenship by buying a property. So that's what we do, and we've been doing it since 2008. Have offices as well as in Cyprus, in Cape Town and Johannesburg.
Well, Jenny, thank you very much. And as I'm sure you can all hear in our digital age at the background, sorry about my dogs in the background, but we're on the sunny coast of Belito, and we are often in our little home sort of invaded by a few little monkeys that have decided to come join us in the garden. Yeah, so my dogs are just welcoming them into the garden, so sorry about that. So Jenny, welcome, and thank you very much for joining us. We look forward to hearing a lot more from you about Cyprus and about the investment opportunities that exist across there. Sean, you're not in the UK, but you're representing some property investments from the UK and some ideas from that side. So welcome to Sean.
Thanks very much, Eugene. Yes, my name's Sean Thompson. First and foremost, I'm actually a property investor myself. I've been investing in the UK market for about 16 years now. I've got into training people in about 2010. So I educate people on how to get involved in UK property. I've trained and mentored more than 7,000 people in UK property specifically. About 4 years ago, I moved back to South Africa, being a patriotic South African. One thing we've really focused on now is giving people Jenny mentioned the word there, plan B, an opportunity to live in South Africa, but get their money offshore and create an asset protection base. So we really focus on the UK as a property market. Two things that are really great about the UK property market is the ability to recycle your money. So buying distressed assets, refurbishing them, and then refinancing them. And then the ability to get cheap money. So, interest-only financing means that you can create cash flow from day one. So we've created a unique system. WealthTrack is the company I'm representing for South Africans to invest in the UK, but continue to live here in South Africa, 100%.
Yeah, well, Sean, thank you, and thank you very much for a good introduction over there. Justin, you know, stranger to these webinars, and definitely no stranger to the property sort of game in South Africa and abroad. You're going to be helping us and giving us some insights into the US. Probably a slightly different investment the way that you guys are putting it together. Quite a lot of thought has gone into the investment that you guys do put together, and it's aligned probably a little bit more around the medical field, but I'm sure you're going to give us some wider insights. So welcome to Let's Talk Property.
Indeed, thanks, Eugene. And of course, I'm just down the road from you. We're all spread out all over the country, and coincidentally, I'm a couple hundred meters from you in Zimbiti and Belito. So thanks for having me on, and lovely to chat to you all again. Again, the problem that we were trying to solve is we were trying to look to invest our own money offshore, and we specifically like the US because of the US dollar. It's very complicated investing in the US unless you buy a single residential. We certainly don't offer what Jenny and Malcolm offer in terms of residency, but what we do offer is we offer really good, solid, consistent returns in US dollars, and that we've managed to solve and to scale over the last few years. So I look forward to getting into a bit more detail on it a little bit later on, Eugene.
Thank you very much. So just as a highlight before we introduce Graham as our final panelist, but with the residency and the visa sort of alignment back to this conversation, we have aligned that for next week's conversation, and Neil's going to be looking a little bit more into detail about the visas and the residency sort of programs that do exist. So we may touch on it today, but I don't think that's going to be the focus. What we really want to do is focus on this from an investment point of view, but I do know that a lot of the conversation will touch on that subject, and I'll definitely highlight and lead into those elements for next week. Graham, you definitely no stranger to working with the Elan Group. In fact, we share offices in one or two of our spaces, so it's always great to have you along. Graham's going to help us just to give us a little bit insights in terms of how the money does move across and what sort of insights he can do and how they assist in making these money movements a reality. So Graham, welcome to Let's Talk Property.
And thanks. Yes, yeah, we've been on a few of these chats. So Sean and Justin, and we've been on the panel together as well. So from our side, I'm Graham Barrett. I'm one of the directors of the South African business, Currencies Direct, and basically what we are, we're private bankers for foreign exchange. So you're going to listen to the esteemed panel. You're going to understand where's best to invest or purchase property abroad, or if you're looking to move money, bringing money into the country, or sending money out for these opportunities that are going to be presented to you, Currencies Direct can help you get it there. So we cut through the red tape. We sort of give you more value for your money. We're just kind of we're the conduit. We'll send the cash, but you first listen to the experts in where to invest.
Thank you, Graham. And listen, you've helped a lot of ourselves and our clients in the last couple of years, so we're very grateful, and thank you for joining us. I think we're almost at through the first 10 minutes of the webinar already, believe it or not, and we've only done the introduction. So let's get into the meat and bones of this. I'm going to start with Malcolm. Malcolm, you guys have been speaking Portugal for the last 18 months or so and doing quite a lot with yourselves and your partners in that area. What makes Portugal a good investment?
Good question, Eugene. And I perhaps just want to touch on a point Justin made. We're all about a good investment. The fact that you can get residency benefits is not the key departure point for our value proposition. If you look at Lisbon, where our focus is, over the last 10 years, the Lisbon residential market has delivered a 98% growth. That's coming from Savills, a recent report, 98% growth nominal over the 10-year period, second only to Berlin at 127%. So from a European residential market, it's right in the top tier. And that's really been what really got us excited 18 months ago when we started out developing property, as opposed to being an intermediary, but being on the ground, developing in Lisbon. If you look at the commentary about Portugal, the economists are saying what they did post the global financial meltdown, the global financial crisis in 2008, is they introduced some very positive structural economic reforms together with the Golden Visa scheme, which has brought about a wonderfully strong foreign investment into the country and has created this buoyancy over the last 10 years. Of course, we're all in a totally new world now, post-COVID, and we're all trying to understand where it's going. The great news for the folks who've invested with us is that in this first 6 months of 2020, we've seen prices come off by no more than 4.3% in Lisbon, compared to 21% back, when the whole world came unstuck in the last major crisis of 2008. And to sort of further support that, we've had endorsement from Knights Frank, from Forbes magazine, from Savills, from in fact even Andrew Golding, who all saying Lisbon is one of a few, 3 or 4 cities that's going to do okay in 2020. We're still going to see positive growth, which really is what has excited us about Lisbon. There are a whole lot of things that underpin it. couple that I've mentioned with the macroeconomic environment, the great roads and infrastructure. It's a very, very peaceful city. There's just about no crime in the whole of the country. The cost of living is probably at the lowest certainly in Southern Europe, but basically in the whole of Europe. The English is spoken widely in the country. So there are just so many macro factors which are underpinning Lisbon as being such a positive destination.
Malcolm, from your side, I mean, you guys are more than just sort of selling property on the outside. You guys are physically investing and developing in that country. So there must be good returns. From some of the developments that you guys are busy with, can you give us a sort of an indication of what you guys are developing at the moment and what those sort of look like in terms of the setups of those apartments or houses, or what are they?
Sure. So the slide on view at the moment gives you a high level of our first development. We're on the ground. We broke ground in May. We're busy with a 90 million euro development, as you see. We've sold out roughly 75% of that as we speak. Most of that was done off plan. A large part of that interest came from Johnny Ravi's database in South Africa based on his reputation over the last 40 years. We had a wonderful support from that database, and more recently from many other quarters, because of the compelling investment proposition that's on offer, and of course the track record of the developers. We've got a really special site in one of the best parts of the city. The 150 apartments, as I said, we've closed out on close to 150 now sold. Most of our investors are looking at the returns. I would say probably 30% have ambition to get involved with residency, but the bulk of them are looking at leverage returns north of 10%, which is really underpinned by the loan to value options of up to 75% for foreigners in Portugal, and the incredibly low interest rate. You can borrow money at the moment fixed at around the 1.3% for 30 years. It's just, it's just all looking good, notwithstanding the challenges of COVID, which, as I've said, have had a small impact in the last 6 months.
We're definitely going to come back and touch on the COVID side with the panel as we move through this in the next 50 minutes. Just on the returns, you're talking about a 10% return. Can you define a little bit better for our audience how those returns have worked and sort of what period of time are we looking at for getting these sort of returns?
Well, the sort of rental yields in Lisbon, as I said, in the last couple of years have been running at the 4%, 5%, 6% level. Mainly because of the supply-demand gap. There's a real shortage. There are very few greenfield development opportunities in Lisbon, so most of them are brownfields. And the approval process doesn't happen in a heartbeat. There's a Mediterranean factor. Everything goes a lot slower there than back here. But it works in our favor and in our clients' favor because of this supply-demand situation. So rental yields have been strong over the period and continue to be strong. And then if you back that up with the loan to value of 75% and the low cost of money of 1.5%, your leveraged yield gets quickly to the 10% plus scenario on the income side. If you look at the capital growth, as I said, the market has been delivering 98% over the last 10 years. So that's an average of 9.8% per annum. Savills have identified as Lisbon as one of 5 cities, 6 in fact, Amsterdam, Berlin, Miami, Paris, and San Francisco, as one of 6 cities that's going to show the best growth over the next 5 years. So the fundamentals are very, very strong. Of course, on top of that, we in our LX Living project are guaranteeing a 4% gross return to our investors over the first 2 years. It's a hands-off property management service that we're offering those investors, investing less than 650,000 euros. And that is a very important consideration for the folks who've supported us to date, is the fact that they know, they don't have to get involved in any property management process. The 4% is the return they get post all management services. the cost of rates and taxes and levies in Lisbon are incredibly low compared to South Africa. Of course, there's no security. You know, we know levies in a residential development, 70% normally is security costs. Well, because there's such a low crime situation, safe city, that problem disappears. So the levies are low, the rates and taxes are extremely low. So if you put that all into a pot and then access the cheap funding, that's the yield we're talking about, 10%.
Malcolm, thank you very much. I mean, that's a great start, and I think a little bit of, for our audience to definitely chew on. I'm going to move across to Cyprus now, literally. Jenny's going to sort of give us a little bit of an update. I think, Jenny, one of the questions that we really want to raise around Cyprus, just to kick it off, is how has Cyprus weathered the storm that's happened over the last while? Not only COVID, but prior to that, you know, with the economic sort of changes that have happened across Europe. How has Cyprus come out the other side? What does it look like after it's got there? And why does it still remain a good investment for people looking for property?
Yeah, great. So Eugene, let's just quickly touch on the collapse of one of the banks that happened in 2013. And that was basically because 75% of the entire client base was sitting in Greece, actual Greek clients. And when they had the collapse of their economy, that had a ripple effect on one bank. Angela Merkel, Christine Lagarde, and the IMF wanted to actually impose a once-off penalty to every bank account holder to bail out that bank. But the president at the time said, listen, we're not setting any precedents to be able to allow governments to get that much involved. 2013 was a collapse. It was dire straits, but very quickly, because it's a relatively small economy and lots of funding was pouring into the country, it managed to get on her feet quite quickly. In fact, there's a 1.8 billion euro funding that's coming through now on the natural pipeline between Cyprus and Egypt. They are the first concessionaires who are going to benefit from the massive natural gas pots that are found in the Eastern Mediterranean that belong to Cyprus exclusively. Their residency and citizenship program has certainly generated a lot of income for the country. And because it's an ex-British colony and there's no language barrier, it was considered the top 10 safest countries in the world to visit this year. You have the very social lifestyle that we know in South Africa, but yet without the ills and that we have with any complexities. It makes it a very, very attractive destination for people wanting to invest, get decent returns. Then there are those that eventually get their luggage and their furniture on the next courier boat across. They decide they want to come and live here, but it's the language barrier that is not there that makes it a lifestyle choice. Even for retirees, it's for people who want to come and study in the English-speaking universities. And like Malcolm was saying, the cost of living makes it a no-brainer for South Africans. I mean, we're looking conservatively, even at 20-1 against the euro, of about a 35 to 40% cheaper to live in Cyprus than it is to live in South Africa. And when I say cost of living, we're looking at rates, taxes, data, telephony, petrol, groceries, etc. So that is where it's having a big appeal for people, specifically in South Africa, but also around the rest of the world and all of the infrastructural developments.
Jenny, well answered. Jenny, what is on offer now for investors looking to look at Cyprus as a destination?
So what I've got is, if I can share my screen quickly and go across. Bryce, am I online?
You are.
Yeah, great, fantastic. So, so what's in essence where Cyprus has a big advantage is that you're looking at lots of property opportunities, which makes things a no-brainer for people to look through. Discounting all of the tangible elements that Malcolm mentioned earlier, you have the ideal location situation where you're looking at the geographic environment that Cyprus has a value proposition. I just want to double check if in fact I've given you the correct presentation, which I have not. My apologies. Let's go back to the right one. The big advantage with Cyprus is that you have a large amount of property types that make it appealing for people who want to invest in the country. So not only have you got the environment where you can have a look at the investment levels from let's have a look at the apartment living, where you have the opportunity to look at the vanity purchases, but the big encompassing environment is how safe the country is for people from a lifestyle choice point of view, but also in terms of where they've managed to control themselves with the pandemic. They managed to keep that COVID numbers down. They were very strong in terms of what they wanted to do to make things happen quite quickly. And the question that a lot of Europeans and investors are saying is, could this now be the next investment hotspot for people who are wanting to spend their hard-earned currency to invest in a property in Europe? The rental yields on the holiday market are exceptional. We have expanded in terms of my business, and we do a property management and rental opportunity where we are getting as much as 8 and 10% on the short-term lets for my clients who are buying in the right kind of areas. When I say right kind of areas, it's obviously in the tourist environment where you're close on the bus routes. You're obviously in a complex where there's a swimming pool. And even for those long leases, I like what Malcolm said, that it's quite a conservative option in Europe. We're looking at about a 3 to 5%. We do have some projects where we've got a guaranteed rental for the first 3 years that you own your property. And I'm going to whiz through some of the opportunities that are available in Cyprus for people to have a look-see in terms of where they are looking. On the western side, the Paphos region, our company call as the Western Cape of Cyprus. This is where the wine estates are, the golf estates, it's the organic and agricultural belt, and it's a very similar lifestyle to what we're used to. Here we have one particular project called Aphrodite Gardens. This is very good for our clients wanting to get into the residency program because the entry level here is 300,000 euros. We're looking at between 4 and 5% as your long-term rental. And here I'm getting my clients between 7 and 8% on the short-term holiday lets, purely because of the location. These come completely fully furnished. It comes with your really low levies. You're probably looking at around about 200 euros per year would be your levy costs to own a property in this particular project. And your levies are covering everything from your chemicals in the pool, garden, maintenance, etc. King's Palace is another splendid development literally across the road from the Med. If you cast your eye to the left of the picture, you can see you're within walking distance to the beach. Properties here are going to be all resales, starting off for a 1-bedroom around about 150,000 euros. Your top end of 3 bedrooms, you're looking at around about 275. An excellent choice for investment. You'll notice there's no trilly doors. There's certainly no guard houses. Bryce, if you can swing across to the video, if we can link it to Limnaria, that'll be great, because this is the flagship project within the city of Paphos.
So what we'll do, Jenny, is we'll run the video at the end, just from a buffering point of view. It does make it slightly difficult.
Excellent.
Jen, can I just ask a quick question? Just on the short-term versus long-term sort of rentals in terms of as an investor from a short-term to a long-term. Right now, I suppose short-term would be under a huge amount of pressure with limited travel happening. How have you guys protected investors over that period of time with what's happened now? Or is there still good long-term letting that sort of is substituting that?
Right. So even with COVID, Cyprus opened her airports in July last year. So they were very circumspect in terms of categorizing the travelers from different countries. And some were required to do a COVID test beforehand. Some were required to quarantine. Despite that, all of the properties that we managed for our clients, and we have a portfolio of over 50 currently, we managed to get an 80 to 90% occupancy from the middle of July all the way until the middle of September. So we've got to take this year as a blip on the screen. This is certainly not normal living in any way. Despite that, those that have opted to go for the long-term tenancy are maximizing from all of the infrastructural developments. So with the new marinas that are being built, certainly with the natural gas plants and fields, everything that's happening with the new casino resort, which is the largest ever built in the Mediterranean and Europe to date, there's a huge demand for that. So those investors only want the short-term holiday lets. They realize the value in having it for the 6 to 8 months of the year where you get the higher returns, or you get those guys that are more conservative. And depending on that will depend on where the better opportunities are in terms of the property layouts.
Perfect. Well, Jenny, thank you very much. If you could just give us back the screen from that side, I'm gonna move across to Sean, but we're definitely going to come through. I want to play a little bit of time just now. I also want to talk about how we are protecting people that are renting overseas, but I'm sure that Malcolm yourself can give us some answers, but I will come back to that. So Sean, I'm going to move across to you and sort of staying in the Europe side, looking at UK. I know that you guys have historically focused on Wales, but there's a wider offering that you have done. And over the last 16 years, you've been doing this sort of quite consistently. So is the UK, or has the UK always been a good return from a property point of view?
Yeah, look, I think the UK is always offered because it's a very small place. That's the first thing to say, Eugene. It's a very small place with a very big population. So the fundamentals of the UK property market have always been strong. The affordability, what people earn there versus what property prices are like there. Obviously, money is very cheap, and from a supply and demand perspective, that is a really big thing. The UK for probably the last 10 to 15 years simply haven't been building enough property, and there've been a lot more people going into the rented sector. So there's a lot of help for investors like us by way of interest-free loans to refurbish property, grant money available. The government's really incentivizing private investors to help them solve the fact that they haven't been building enough properties by doing up empty properties. So our focus very much is educating people so they know how to invest their own money. That's the first thing. We don't sort of focus on the new build offering whatsoever. It's very much more on buying distressed property, increasing the value by by refurbishment, and then being able to recycle and generate cash flow from day one. Our focus is very much cash flow, not capital growth. In South Africa, typically you would wait a long time for a property to be cash flow positive. Whereas, with the lending rates that are available, you can enjoy cash flow pretty much immediately in the UK with the right people, in the UK to look after your interests, which is exactly, what we do by introducing them to vetted third-party service providers in the UK to assist with their investment journey.
I was actually just going to touch on that because from a support point of view, with the distance that exists, I mean, it's something that you guys sort of specialize in and have specialized in over the last 16 years. What are those infrastructures that you put in place to make sure that an investor this side that's looked into a property or a sort of an investment on that side, what sort of support are you putting in place for them to ensure that they're looked after, that their property is looked after, and that there is access to the right information?
Well, obviously from my experience in training people, we offer a series of educational live webinars here. We've just finished a discovery series last week. So what we like to try and do is give investors the right amount of information to be able to understand how they're investing their money. So they're not just throwing money at at someone to do it for them. They've got a real sort of educational know-how to be able to carry out due diligence on a property, understand what properties are worth in good condition, understand what refurbishment quotes are like. And then, in terms of my experience in the UK, it's obviously, and network, I've done training all over the world for a guy called Robert Kiyosaki, who you may have heard of. So, these are, people that we can actually tap them into through my experience, network-wise in the UK, who have been vetted, who've been interviewed, so that we've got the right management agents, the right building project managers on board, and certainly the right people finding properties from distance. We obviously deal with compliance sourcing agents, so people who've got the right level of compliance in the UK, like an estate agent who accepts the commission for, selling a property. A sourcing agent who effectively works for an investor rather than for the seller of a property needs to go through a level of compliance, which is exactly what we've set up. And we introduce the investor with the right education to the right vetted third-party service provider in the UK to look after their interests.
Sean, thank you. Sean, from your side, what sort of returns are the guys expecting or wanting or getting as return from investments in the UK at present?
Well, typically what we focus on, and Eugene, one of the reasons why we quite like Wales is there are low value properties there. So we're not sort of focusing on London or the M25 where you can buy, you might be able to buy a garage for £250,000. We're focusing on, your sort of entry level buy to let properties, which you can typically in Wales, as we expand into the rest of the UK, Birmingham, Manchester, Scotland, you can typically pick those up for sort of £40,000 to £60,000, spending sort of 10 to 20,000 on the refurbishment, with those property values being, probably being worth about £85,000 in good condition. Now, in terms of returns, so money left in after you've effectively refinanced that property, you're probably looking a minimum of 20% return moving forward. But that can be better. It all depends on the deal that's been found. It depends on the strategy applied to the deal. So if you go from a buy-to-let potentially to an HMO where you can rent rooms out rather than, to rent the whole property out, it depends on the strategy. But I would say a minimum of 20% typically is what our students that we work with here in South Africa, and they're all based in South Africa, and obviously investing to the UK market, that's typically what they achieve, Eugene.
That's great returns, and we'll definitely come back and sort of highlight some of those as we move on through the next half hour. I'm going to move across to Justin. Justin, you in your side and your company have applied a totally different sort of model. What you've done is you've looked at a little bit more sort of guarantees and returns that can come out, and you've used sort of the medical field to almost ensure 10 years and 10 years more for investors, and really creating a a secure investment for them based on real returns and real leases that exist in the US market. Can you give us a little bit more insight from that side, and hopefully I've captured it in the right sort of vein in terms of how you guys are doing it?
Eugene, you're doing just great. I think I should leave you the presentation. You're doing a fantastic job. No, yes, no, absolutely. I think first of all, what is the problem that we set out to solve? As I mentioned in the beginning, we were looking for stable income-producing assets and real estate for South Africans that were looking for a place to put their money offshore and put it somewhere safe. So, two things. Number one, we had to make it easy for a South African to be able to invest in the US. As you know, Eugene, it's quite tough moving your money offshore and getting it in and out. Ultimately, you have to set up a company, an LLC, or depending on what part of the world you're in. And we try to find a way of making it super easy to do that. The second thing, obviously, is to give investors access to these blue chip assets that we would never normally have access to. So the normal thing for us all to do, and excuse me, if I'm trying to take something away from single housing is not necessarily a bad thing, but it's what we normally have to do because that's what we can do. We can go and acquire a property. But the really blue chip properties, the commercial properties that generate these fantastic returns, we can't go out as South Africans and go and acquire a $30 million building. So we have to do it together with others. And that's ultimately where we started off. We started off by going over to the US, and I'll get into the people and why medical a little bit later on, and trying to find a way of getting a syndicate of South Africans together to acquire one of these fantastic blue chip buildings that normally would only be accessible to the family offices and the institutions. So that's how we set about looking at this thing, Eugene. And I think that where we are today is we have a system that will allow somebody to invest as little as $5,000. The shareholders end up owning the building. We initially go out and acquire the building, and then we effectively allow the investors to come and buy the building. They hold a ISN secure investment in effectively a listed entity that owns only that building. So it's completely ring-fenced to that building. They know every single bit of information about the building, who the tenants are, who the leases are, and we encourage them to actually physically go and travel and look at the building if they want to. So we've made it super easy. All the income that you get is in dividends. It comes back, and obviously we dump it in the Seychelles. You can choose what to do with it thereafter. And our target is to make 8% cash on cash in US dollar return, which we pay out every quarter that works out to roughly 2% a quarter into your wallet in the Seychelles. You can draw it back to South Africa super easy, or you can reinvest it and keep it rolling, or use it to support your education of your kids overseas or whatever. So that's the basic concept. But I'm leaving one thing out, and that is that us as South Africans and predominantly sort of property people, what we really like to do is we like to buy the property and then add value to it. And ultimately, when we get to sell it, we've got some capital growth. So not only do we provide you with the 8% cash on cash, but we have a 5-year investment period. After 5 years, we have the mandate from you to sell the building. Once we sell the building, there's a capital growth, and our incentive, in other words, the company's incentive, or best incentive, is actually to add value to the building. The value that we add to the building, we split with the investor 50-50. So there's a nice capital growth at the end, and that's where our incentive is. So we don't get to make much of the money until the end. Our incentive is to make you money at the end. So what this translates to, guys, is that you make your 8% cash on cash, but ultimately you get a higher IRR, which effectively means that your return per annum it would be 11% instead of 8%. Now, some of our buildings are looking at IRRs of 16%, but I think it's very important to understand that risk and return go hand in hand. So we have opted for a low risk scenario where there's not much that we can do in terms of value add. We don't do developments, we don't speculate. We literally buy a building that is already profitable. We run the building through the course. We perhaps change some tenants. And of course, one of the tricks is to move from commercial to medical tenants. And if I've got a second, I think I might be running out of time. But I'll
carry on.
Okay, so I think the next big question is the medical question. Why do we only invest in medical, and why only in specific states? And I think that is really the real exciting juice. Medical is very, very unusual type of real estate. Firstly, your tenants all look for long-term leases. Secondly, if we look at the US, and the reason why we're going into the US and specifically these states that we're in, is that you have an aging population. To give you an idea, there'll be 80 million Americans by 2050 that are over the age of 65. And over the age of 65, that demographic, by the way, visits a doctor or needs 5 times more medical care than someone below 65. So that is a super exciting stat. And the whole idea is if you buy a building, any building, it doesn't matter where you're buying it, in Wales or in Cyprus, make sure that in 10 years' time, it's worth more than it is today. And that's the fundamental that we really, really are excited about. So that's the medical thing. Obviously, there's a whole bunch of other things with medical. There is a thing called a certificate of need. So once you apply for a license to open, for example, a radiology practice in Dallas, you have to do an environmental impact assessment, and that sticks to the building. So if you leave, somebody else can come and take that place. So your building effectively owns the right to practice, not the doctor. And I think that's super interesting. So our leases, I mean, on one of our buildings, to give you an idea, we have an average lease on the building of 17.5 years. And where do you find that in real estate? So you know what your income is going to be for the next 17.5 years. So that's it. I'm probably jumping around a little bit, and I haven't even bothered to share any slides or anything, Eugene, but I think that's
I think you did a very solid job. The only 2 questions I was going to ask, which you've actually already covered, but I just want to touch on one of them very quickly before I hand over to Graham. It's just on the bureaucracy of dealing in the US. Are you guys protecting the investors from that bureaucracy through this sort of vessel that you've created for this investment, so that they don't have to go through the big red tape of doing that?
No, absolutely, Eugene. I think that's where the key IP is. We certainly spent an enormous amount of money on American lawyers and tax advisors, and ultimately we ended up realizing we had to use a listed entity or a listed domain, and we just selected the Seychelles because it is one of the newer and the more reasonable exchanges to utilize, and it helps solve all that problem. So from an investor point of view, you move your money, it sits in escrow in the Seychelles, it goes from escrow into the building. You own a listed security, so you have an ISIN number that you can look up on Bloomberg. You have a listed security, and it only is in that particular building. And you don't have to worry about that. The money ends up in your wallet. You can do what you like with it. We worry about all the tax and all that stuff on the other side. Apart from obviously your own personal tax wherever your domicile is.
Justin, thank you very much. Graham, talking about moving money and sort of looking after the clients or the users, this is definitely an area that you're an expert in, and I want to touch on 2 things if we can, but I really want to start, but just give us some insight in the movement of money. I mean, there is a set amount annually that South Africans can do, that can move. How do you guys advise clients in getting started in something of this structure where they are moving money overseas to purchase property in another country?
Eugene, thanks. Yeah, and the poll, came up with the majority wanting 43%, I think, talking about diversification, looking to send funds out. So, we work with a lot of professionals, attorneys, property developers, IFAs, that sort of thing, and we're helping the clients send their money abroad. How do we do it? Well, first of all, we've got to have a look. It's all, each individual's got their own specific needs. But as a South African resident, we're allowed to take up to R1 million per calendar year out as part of our discretionary sort of single discretionary allowance or foreign investment allowance. We then have a further allowable amount of 10 million, which we can get a tax clearance certificate for to be able to send the funds out. This is without you having to immigrate or anything like that, There is also a further allowable amount. I do applications for some of our clients of 50, 60, 100 million a year. So while you have your 1 million and 10 million sort of allowable amounts for discretionary allowance and then tax clearances, there's a special letter of compliance that you can get from SARS that allows you to take out more without having to immigrate. So there's a lot of different, if you want to send money out, basically you can. We've got exchange control, yes. There are regulations in place, but it's simply about telling the story and telling it correctly and, regularizing the funds on their way out. So it's possible to send as much or as little as you'd like to send. I hope that kind of answers your question.
It certainly does. It leads me to the next one, Graham, and it's probably one that's going to put you in a little bit of the back foot in terms of banks. How do the banks generally support these sort of transactions, or is it something that you guys have to sort of step in to assist in terms of doing it? And if I'm placing you on the spot, I apologize.
No, it's beautiful. So look, ultimately, so we're not a bank. We're a non-banking foreign exchange provider. So we're a financial service provider in South Africa as well as globally. We've actually got our head offices in the UK, and we've got offices in Spain, Portugal, France, Canada, America, Australia, all over the show. So we've had to partner with many banks. So in the European business, we partner with Barclays predominantly. So we use a bank to send our funds out. In South Africa, we use Mercantile, Investec, and Bidvest Bank. So we create accounts for our clients in their name with our partner banks. So Currencies Direct never holds the funds or never has recourse to the funds, but we actually create accounts for our clients that are interest-bearing and they're in their name. So are we a competitor to the banks? Yes. Are we a competitor to Mercantile, Investec, and Bidvest? No. We're an asset to them. We're almost like a sales force for them because we go and generate flows. So Standard Bank, RMB, ABSA, Nedbank, probably not our biggest fans, but there's a market for it. So essentially, we're offering a service that the banks can offer, but we just sort of roll out the red carpet to everybody. So you don't have to be the sort of 100 million client. You can be sending out a couple of 100,000 or $1 million or whatever investment you're looking to do, and we'll give you that sort of handheld red carpet treatment.
Okay, cool. Thank you, Graham. Thanks for the good answer. So we've had a look at property investment from a number of the countries at the moment, from Portugal, Cyprus, UK, and the USA. There was a question that came up, and it's really from a namesake point of view that I'm going to ask Sean to answer. This is a gentleman from Gauteng who asked us quite a weird question. I thought it was probably quite relevant, specifically for our audience. Is it not seen as unpatriotic to go invest your money in another country? So Sean, because it's your namesake that asked, I'm going to ask you if you can sort of just answer this question, please.
Well, Eugene, thank you for throwing me under the bus, and I'm quite happy to answer this question. I think, I think on the contrary, it's wise. The world has become a lot smaller place now, and you listen to the likes of Graham, moving money across to different parts of the world, and that gives you the ability, effectively, to invest your money in jurisdictions outside of South Africa. And I think that is wise. I think it's sensible from an asset protection perspective not to have all your eggs in one basket. We're currently working with two extremely patriotic South Africans in Malcolm Marx, the Springbok rugby player, and Barry Hilton, the cousin. And their mindset is exactly the same. They love South Africa. I love South Africa. I came back here 4 years ago to live here. But they want a plan B. They want the opportunity to invest their money into the UK market, which is obviously a first world economy, and earn a foreign income, but enjoy, what this beautiful country has to offer. So I hope that answers Sean's question.
It most certainly does. I saw Justin was trying to get in there, but he said, I'm just going to wait for him. Justin. He was raising his hand to also sort of add this. So Justin, over to you.
So I just throw my 2 cents in there. Let's not forget, Sean, that in your part of the world, the reason why the UK is such a rich little island is that people from the UK put their money all over the world back a decade ago, or a century ago, should I say, and now all that wealth flows back into the UK, and I think to a lesser extent the US, but it's very wise for us to invest in places that we get a return, that we can repatriate that money back to South Africa and live off it, and of course re-employ it back into South Africa. So yeah, I think you know, the argument can be made that we're doing the right thing, we're doing the patriotic thing by investing it in a place that we can get returns that we can repatriate, as opposed to spending it on I won't say it, but
yeah. Look, I think it's a
yeah.
Yeah, very good view, and I'm sure that Sean from Gauteng is going to be very happy with his answer. So please, Sean, drop us a line if you're sort of happy with the reply. Just across to Jenny and to Malcolm. I wanted to speak about how the guys are getting protection. So if there's a property that's in Portugal or Cyprus, and there are tenants that are renting in those areas, what protection are you giving, or how are you creating protection for looking after that property? And I understand that crime might be very different in terms of how it's set up, but I'm sure there are breakages and changes within those buildings over a period of time. How are you protecting an investor, and how can they be seen that the investment is looked after?
If I can start off the answer. So I think the success of any investment, especially overseas, is the strength of your property management company and the firm that you're working with. So in Cyprus, although it is a dedicated process to be able to get a defaulting tenant out, it is a very clear process in what needs to be done. So the strength of your property management agent will be able to step in quite quickly once they see the first or second month's rent is not being paid, and get the process going. So you're looking at about a 3 to 4 month process tops to be able to get a defaulting tenant out. When it comes to the short-term lets, of course, that's the risk that you have. You've got to get the odd broken glass, the odd wine stain on the duvet cover, and that just kind of goes with the costings of having a property that you're going to be renting out on that level. So it's just in summary, it's the strength of your property management agency.
Yeah, I would, in our case, Eugene, I may be a bit different to Jenny, and I did mention this up front. You know, we're not an intermediary. So we're skin in the game in a big way. Our properties, for example, on our first one, we spent 22 million euros to acquire the land up front with our partner.
Yeah.
And based on our years of experience in South Africa, we understand how to manage the rentals, be they short or long term, how we protect our investors, because they are properties. We're not just putting somebody into a property and hope that you know, all things pan out for them. You're investing with us, and we're going to take care of you. And it's that history and reputation which I think has been behind a lot of our success today. I just want to mention on the points that Sean and Justin made regarding this foreign investment concept. Currency is a big ticket item for everybody. The guys who invested with us this time last year bought in at 16 Rand to the euro. We're hobbling around the 20 now, so they've already made a 20% return just on a currency diversification. I think from a point of view of your portfolio and looking after your retirement base or whatever you're doing, I mean, we really want to make it easy for people to enter into this market. We hold your hand. We know it's not a one-day game. Every one of our 90 odd buyers that have invested with us to this date from South Africa, it's been a one-on-one customized interaction, including engaging with our people on the ground in Lisbon, walking you through the site, finding the right unit for you, putting you in touch with the finance, the mortgage brokers that we've assembled, the attorneys, et cetera, et cetera. But it's a very sort of customized approach to make it easy for South Africans to take that first step. Getting back to Graham's point, just your simple discretionary allowance. For many of our investors, they've already got their money offshore, but right now is a great time. A lot of folks haven't used their discretionary allowance this year because of COVID. We'll help you. We'll find the right solution. Take the R1 million that you haven't spent this year, and then the R1 million in January next year. Graham would love to work with you on this as well. But we'll make it easy for our people to get into a property knowing that they're co-investing with us. They're not being put into some third-party asset which we don't have active control over.
Malcolm, thank you for the answer. Just you touched on COVID there once or twice in the conversation, and I'm actually opening up to the panel. Has COVID had a negative or positive effect? I mean, and I understand it's had a negative effect in its entirety, but you know, coming out of it now with us having lived with this for a good couple of months now. I mean, 170 odd days from a South African point of view. in terms of where we stand now, are people looking to invest overseas? Is this part of your business still thriving and surviving, or has it taken a proper knock because of the changes in the world?
In our case, it's been pretty neutral. I mean, clearly the fact that you can't go and kick the tires and get across has been an issue. Portugal has a very cohesive society. They've run through this COVID thing extremely well. We were able to go on site in May, so we've been continuing with our build, albeit at a slightly slower pace to comply with all the regulations. But really, in our view, it's a temporary blip. As I mentioned earlier, 4.3% drop in prices in 6 months during COVID, which is great news. Sadly, it's actually, or happily, the COVID situation has enhanced our value proposition because Portugal has done such an outstanding job in coping, and its national health system, people are, as I said, Forbes magazine has identified Portugal, Forbes magazine in the US has identified Portugal as the most favorable place for folks to retire in the world because of the way it's handled the COVID crisis.
Sean, Justin, from your side, yeah, Sean?
Yeah, it's Eugene. From the UK side, I'm going to sort of look at both sides. I mean, our students have been able to buy property virtually without going to the UK whatsoever. So the guys we've introduced them to since COVID has hit hasn't impacted their ability to buy. Obviously, the markets were closed there for a number of months. The English market opened about 8 weeks ago, 8 to 10 weeks ago now, and the Welsh market's been open for about 6 weeks or so. But, looking at what happened over August time in the UK, £37 billion worth of property sales, a level not reached for 10 years in the UK. A lot of that's pent up demand, but obviously people are going to buy. Rightmove, which is the big property portal there, well, the day the English market opened had 5 million hits. They've never ever had that ever before. So that's either through people living together during COVID, deciding they don't like each other anymore and they're wanting to move, or people looking at potentially relocating, working from home, getting a bigger property. So ultimately, the government's done an incredible job there in terms of money into the system, the furloughing scheme, paying 80% of people's wages, bounce back loans, COVID business interruption loans means there's a lot of money in the system. And ultimately, with Brexit, that's created 3 years worth of uncertainty where prices are actually dipped, but money is extremely cheap at 0.1%, which means you can create massive cash flow. You actually now are going to look at the market sort of starting to take off. So we believe the next sort of 12 to 24 months is going to be a really good time to buy property in the UK.
Okay,
Eugene,
cool.
if I can jump in here, I have found that
Please.
South African investors have used this time to get all their paperwork and stuff sorted out from a South African point of view, open up their offshore bank accounts and speak to the likes of, Currencies Direct and Graham and the team to start moving their money now, especially with the volatility of the rand. So although there might not have been any huge amounts of sales that have happened or transactions that have gone through, it's been a good time for people to assess, actually get that important documentation from Home Affairs, start working on your police clearance, getting everything nutted and bolted so that when the news alert that came out about an hour ago on News 24 that basically said Ramaphosa is going to be taking the international travel, I think they're making an announcement on Wednesday, that they're going to be deciding which countries they're going to be flying out to. That means that now people that have done the homework, done the due diligence, are ready to hop on a plane and, as Malcolm said, go across, kick the tires, see if it's an investment that they want to do.
Yeah. I think just if Graham, as you as the most neutral person in this space, how have you found the last little while?
Yeah, no, so just to come in there, I mean, the COVID story obviously it's never ideal for anyone, or hasn't been for anyone, but in our business, working remotely, we've seen an uptick. So as Jenny was saying, we've been registering more people than we ever had. So we've had record numbers of registrations. We found that there's more money, we're sending more money out than coming in, whereas previously it's kind of like a 50-50. So, if the rand sort of loses value, then we'll be bringing money in. If it gains strength, then we'll be sending money out. So at the moment, we're at kind of 16.30 levels to the dollar. So it's, it hasn't been this strong since sort of mid-July. So we're starting to trade quite a lot with, pent up demand with our tax clearances that have been in place. And as Jenny said, so people have been getting their ducks in a row, waiting for the market to move. And then when it's kind of at a favorable level, we're sending their funds out. Now, similarly, on the flip side, with the travel ban, we haven't had all the foreign investors, but we're still seeing foreign investment coming in. So it's not a case of guys are not interested in South Africa. They're absolutely, property companies are selling. They're doing some of the, I know, Better Bond and bond originators and that sort of thing are having like record months. Obviously, our interest rates have dropped and it makes it a little bit easier, but we're still seeing foreign investment coming in. So it's a bit of both. I think I'm lucky to be kind of stuck in the middle to facilitate either way. But the money's flowing.
So let's say we had Pat Simcox last week, and he was giving some feedback on Remax, and they've had record after record months. So the internal sales are definitely happening, and long may it last. Believe it or not, we're almost at the top of the hour. This was one of my first discussions about international investments, and I've really enjoyed it in terms of where it's come out. And this is really in line with what we're going to be doing from our side, from Elan and Real Estate Investor for the 11th of November. We have a massive seminar that we've set up for people buying internationally. And when we're talking about buying on a global stage, hopefully we're going to be able to give some more insight and knowledge and really try and allow the investors out there to get some options together. We're also on the 14th of October, in a couple of short weeks from now, we're also running a masterclass for first-time home buyers, which I think is going to be well represented, and we're going to have a massive take-up for the amount of people that are going to be listening to that show as well. Next week, we're going to continue the conversation around where we are at the moment, and that's really looking at the visa programs. And I know there's a few people that are looking to move from this webinar to next week's webinar, to start looking at the visa programs that are out there for people that are looking not only to invest, but looking at this as a definite plan B from a visa application retirement option for buyers. I really want to give everyone a chance just to wrap up, and it doesn't matter if we go slightly over the time, but if we can start in the same way that we started. And Malcolm, if you can just give us some parting knowledge from your side, please, as we wrap up.
Yeah, thanks, Eugene. It's been great to be part of this panel, so thanks for inviting us. I think that offshore investment for lots of folks looks like a major decision. If we listen to everybody this morning, I think one of the messages coming through is it's actually not that complicated. Everybody's offering something but different, but the sort of commonality is it's an easy way to there's so many easy options to take your money offshore and put your foot in the water and get going. And we would love to talk to folks. We've got other projects. We've got a very interesting project that we're launching in February next year, far lower price levels, 200,000 odd euros. But at the end of the day, it's not something that should be daunting. It's something that can be facilitated quite easily. And I think I speak for all of us when we say, it takes time and effort to talk folks through and get them comfortable and give them the assurance that they're not taking any silly risks in this process.
Malcolm, thank you very much, and good luck with the massive investment you guys have made in Portugal. I hope it goes exceptionally well. And for all from accounts that you've given us this far, there's not too far to go to the sellout. So congratulations and well done on that. Jenny, over to you in Cyprus. If we can just get your little parting knowledge there, please. And you're on mute at the moment, just so you know. Jenny.
Unmute, there we go. The most important factor is to remember to deal with best of breed. If you're dealing with companies or individuals or organizations that have got a track record, don't be too shy to ask for due diligence. Do a Google search. Be careful again of what you're reading as well. There's often a lot of garbage in, garbage out. But I think you have, as Eugene, as hosting this environment, you've cherry-picked people that have got a good track record. So you are giving your investors the sound confidence that they're going to be working with people that actually care about them. It's not about selling a property. It's about looking after them now, medium term and long term as well. And often this is a very emotional decision. First of all, it's financially emotional because it's a lot of hard-earned rand that we're putting into an investment. Then you've got the whole complexity of your question earlier, are we being unpatriotic by wanting to own a property overseas? I think not. But at the end of the day, it's about looking at your needs now and all your future generations. And in the investment that you're making, will it benefit you? And more importantly, will this be an asset that you can pass on as a legacy to future generations to enjoy?
Jenny, thank you. And thank you very much for your time. And we wish you all the best of luck on both sides of the coast in Cyprus there. And I look forward to coming to visit Cyprus very shortly. Sean, over to you from a UK point of view, not in the UK, but definitely speaking about the UK. And if you can just give us your parting shots, please.
Yes, Eugene, thank you very much for the opportunity to Elan, and great to hear what the other panelists had to say. Obviously, I live in Plettenberg Bay because the weather's a lot better here than it is in the UK. However, you know, the investment opportunity in the UK is hugely attractive in terms of where the market is and what the government is doing to incentivize private landlords there. So from a wealth track perspective, what I would say is, you know, if you want to learn and educate yourself, you know, on how to take advantage of the opportunities, invest through your own structures, make your own decisions and build a portfolio, like Jenny said, that you can create a legacy with moving forward. We can assist with that. We can also assist with you know, the company openings, the company bank accounts, all the stuff that needs to happen. We can do that virtually and introduce you to the right vetted third-party service providers in the UK to help control your assets from that perspective. I have just in the chat box there chucked a free guide in there for you guys, just to remind you, there's a, you know, just a 12-page that I've written just to give you some further insight into the UK property market to assist with your decisions moving forward. And I wish you all the best from that perspective.
Good, John, thank you very much, and thank you for sharing that with us. And just from the audience point of view, we obviously will be able to contact any of you through ourselves, so please drop us a line and we'll make sure that if there's any outstanding information or more information you require, you can definitely do it through our offices. Justin, over to you, representing the US in this situation, and definitely a slightly different way of looking at investments and investment properties. And as usual, you know, Justin, you've definitely brought another spin to how those investments are put together. And if you can just from your side, give us a little bit of party knowledge.
Yeah, I think, Eugene, what Jenny said was particularly correct. I think what's most important is that we do need to diversify assets. You know, you should be very uncomfortable if you're sitting with those hard-earned rands, all sitting in South Africa. I think it's really important to have some sort of diversification. It's not complicated, but it is quite a big exercise getting your head around moving money very, very far away from where you're at. And you know, just to set your mind at ease, great idea. If you do have some of your discretionary allowance, get hold of Graham, move it across into their investing account, and choose an exchange rate that you want to move your money. And then ultimately, even if you don't have the 300,000 euros or whatever it is to get into the likes of a Cyprus, you know, we can take your investment for as little as $5,000, and once you build up, you know, a nest egg, then you can use it to do the final thing. The beauty of it is that if you've got money offshore, you're an international citizen, and you won't be locked into the local economy or any of the outcomes of what happens in the local economy. So thanks again, Eugene. It's been great being online, and thank you, everyone.
Justin, thank you very much for joining. And Graham, you as the most neutral party definitely get to give the last sort of bit of insight from the panel side. So if it's over to you for your parting words.
Thanks, Eugene. Thanks for having me, and thanks to the fellow panelists. Yeah, I sort of corroborate everyone's stories in saying, listen, diversify. You know, it's something to do. It's a good way to grow your wealth. It's absolutely not, you know, non-patriotic or whatever, because, you know, the more money you've got, the more money you can spend. So it's actually more patriotic. You end up sort of reviving the economy. So, so send money offshore. You know, pick your investments, see where you want to go. I was meant to go on holiday to Cyprus, so COVID has done me in for that. But hopefully we'll go next year. But yeah, if you're looking to get money abroad, we can help you do it. It's a lot easier than you think. You know, the pain of getting your tax clearances and all that sort of stuff, we'll take that heartache away from you. We'll simplify it and give you some more foreign currency on the other end. But yeah, thanks very much for having us. And if you've got any questions, contact. I did check my info in there. But yeah, I think pick your investment and go for it. It's the best advice I can give.
So thank you very much. So this is another week that we've got through for Let's Talk Property, and we've really enjoyed today. It's been 21 weeks of these shows, and we really are enjoying it. Next week, Neil will be presenting, so I get a bit of a break. Neil's going to be looking at the visa program, and hopefully there's going to be a big take-up for that. Please don't forget the 11th of November, the big international seminar looking at people buying property overseas, or what I don't know how we worded just now. So offshore property investments that we are looking at overseas on the 11th of November. And then on the 14th of October, please don't forget the first time home buyers. If you want to get involved in that, please register and sign up for that. From the Elam Property Group and from Real Estate Investor, thank you very much for joining us. Thank you to the panel for being part of it. We really do value your time and effort to be part of these webinars, and we really value the insights that you guys offer. Thank you very much for joining us, and we'll see you next week or the week thereafter.
LX Living is a brand new mixed-use development in Amoreiras, a sought-after residential neighbourhood in central Lisbon. This prime location is just a short stroll from the prestigious Avenida da Liberdade in the heart of the city's gracious, spacious CBD. Greenfield developments in this area are extremely rare. The striking contemporary building, designed by one of Europe's leading architects, features dramatic cantilevered balconies and consists of 151 luxury apartments, ground floor retail, a landscaped internal plaza, 2 swimming pools, a gym, a day spa, and 2 restaurants. The building has been masterfully designed to integrate into the existing urban fabric, providing pedestrian access through several entrances into a publicly accessible landscape plaza, which will provide access to the ground floor shops and restaurants. The 151 apartments of LX Living are arranged in 2 separate buildings linked by a landscaped internal plaza and are serviced by 5 separate lift shafts. The mix of apartment types has been carefully compiled to meet the needs of the market. All apartments will feature spacious contemporary living areas, open-plan kitchens, and luxury finishes. All residents, owners, and tenants alike will have full use of a suite of amenities and services usually found in luxury hotels. Ample underground parking, 2 restaurants and a bar, a rooftop garden and deck, various lounges, pause areas, and meeting spaces, and high-speed fibre connectivity throughout the building. This project is being co-developed by GMG Real Estate and New World, the international real estate development company owned by John Raby. The project was launched in May 2019, and as at the end of October, 120 of the apartments have been sold to an international base of clients. To put that in perspective, we have sales recorded of 65 million euros versus a target gross development value of 90 million euros. A sales suite has been erected on the site, and demolition works began in October 2019. We fully expect to be sold out on this project well in advance of completion.
Hi, I'm Derek Watts. Blithedale Coastal Estate is Africa's first eco-smart city. 80% off-grid, solar power, desalination plant, fiber to the home and 5G Wi-Fi. Holistic estate app. Smart estate utility management. Smart home. 1,000 hectares of inclusive mixed-use development. Eco-design guidelines. 6 kilometers of beach and river frontage. 320 hectares of indigenous forest. Cheers for now, and I hope you'll join me as a neighbour in the Blithedale Coastal Estate community.